Hey everyone, I'm Charting Man Dan of the Chart Guys. I've spent an insane amount of time trading and doing technical analysis over the last 13 years. In this video, we're going to check in on the broader market as the bears finally get daily consolidation underway, and I'll tell you the clues of what I'm looking for to help us determine probabilities in terms of how much follow through do the bears get and what are we going to be looking for into the second half of November. Let's get to the charts.
So the fundamental people will look at today and say that we topped out because the 30-year bond auction went poorly. You can see this big drop right then and there. Technical people will say we were very overextended. All we needed was a little push from anything, and that happened to be it. And then we had Powell speaking in the second half of the day, or I should say in the afternoon, and that just, the momentum was already going. We were already seeing the daily consolidation begin. And so again, just a little bit of follow through at that point. So top is set for now. And now we're going to look at a number of things. You can see it's a nice big red candle, bearish engulfing. So yesterday I talked about how I tried to enter a bearish swing. I did not like the second half of the day. I was getting all these red flags. So head into today with a fresh clean slate and same mindset, scouting that short. And we ended up with yet another gap up open, a tiny one on SPY, but it was another one. And I used the morning that's not what I wanted to do. I used the morning to grab a short with just the same mindset of, we know daily consolidation is inevitable. I now have a clear stop that I can go off of. And the bears had just proven that they confirmed a 5-minute downtrend. All right, they've got some morning control. Let's see what happens. And I did swing it, took 10% of profit into the end of the day because we got to hourly oversold conditions. But going to see what bears can do with it now. So we have some gaps to keep an eye on. Bears would love to head to the gap at 430.92 on SPY. And the clues that we're looking for on what this consolidation is going to tell us is, and again, if I'm looking bullish, I get just as much information from what consolidation does versus what the bulls do. And so I'm watching volume. It was a higher volume day. I'm watching retracement size. Bulls want to hold daily EMA 12 to try and be a bull flag. And we would need to drop down to 423 to give back half the move. Bears want to give back half that move. And we're going to watch the response to first hourly oversold conditions. Futures got there right at the end of the day. The ETFs just barely missed it. But bears want to confirm hourly downtrends with lower highs and lower lows. Keep that going through tomorrow. So SPY and QQQ broke their resistance with no follow through. The futures charts did not break resistance. They rejected right at them. But either way, we're topping out for now. And so now you're going to hear about this inverse head and shoulders, and it may be an inverse head and shoulders, but everybody can clearly see this one. So just keep an eye out for it. That would essentially be, the question is, can the bulls confirm the daily uptrend and follow through with the monthly high or low? That's the question for the next week plus. So SPY and QQQ, very similar. Again, at this point, what would we need for a red flag on this pullback? Give me a QQQ pullback to 359. Because right now, with where we stand, we can drop 2% and still be a possible bull flag. And we would need to drop 3% to get back half this move. So again, there's still proving to be done on the bear side of things. And we're going to look for hourly lower highs to be the result of the next bounce. And we have to keep in mind, we haven't confirmed hourly downtrends yet. We're definitely, this is the most convincing drop in the last 2 weeks. We can say that much, but still got to see it because we had some drops. Yesterday morning looked pretty good for the bears, but hourly uptrend continuation. So prove it tomorrow with hourly downtrends confirming. And if you're a bear looking at laggards and hoping this move follows through, you're looking at names like SMH and AMD, or I should say probably AMD too, but SMH and VDA. So again, same thing, tons of space for an hourly lower high. If we open higher tomorrow, we spend tomorrow morning scouting those hourly lower highs, and that goes for the majority of the market. And if we open lower, I'm going to watch for a bounce to look for an hourly lower high. But NVDA, again, just surging this morning, continuing this move going. And again, highest level in months. The monthly high or low is set. This is a monthly bull flag. We got within less than 5% of an all-time high. So the burden's on bears to prove to us that QQQ, NVDA, SMH, Microsoft, Amazon, that these names aren't monthly bull flags because right now they're monthly bull flags. I know I'm repeating myself, but I'm repeating myself. So NVDA, watching first hourly oversold conditions. If we confirm the hourly downtrend, we're going to look for a daily higher low eventually, but going to take it a little step back and let the bears do their thing and participate on the bear side a bit. And then keep an eye out for when to cut it. Tesla, again, we've been keep saying it, but the relative weakness in Tesla all of the last week is telling us someone is unloading. Someone is selling a large position. I don't know if it's Musk. I don't know if it's Kathy Woods. I don't care. But, to be down today 6% at a certain point, 7% almost, is massive when, the market's pulling back less than 1%. Bears were just feasting on it. The gap to fill, 205.99, has not officially filled yet, but potential weekly bear flag is on the table. We can say the Tesla bulls are not positioned well if the bears in the broader market follow through. And so Tesla's going to scout an hourly lower high, and keep an eye on QQQ, or Tesla divided by QQQ, because as long as this is weak, you don't want to be longing Tesla. You want to be looking to long this Tesla when this shifts. And right now, this chart is testing the lowest level in 5 months, which means Tesla is the weakest it's been compared to the NASDAQ in 5 months. That's a significant amount of time. XLV, big bear drop, easily the lead bear today. And we're seeing that the names that were weakest before we bottomed 2 weeks ago are dropping the hardest. That's not entirely surprising. So XLV was the weakest major sector bounce initially, and it kept dragging on a little bit further, but obviously rolling over in a big way now. So again, it's this one, it's IWM, which is giving back a lot of this. The biotech sector is giving back more than half of this move. So these were all the weaker sectors beforehand. And so XLV has tons of space for an hourly lower high to be the result of the next bounce. And just like I'm using Microsoft monthly chart as a bellwether, if it confirms the monthly bull flag, and it got within 1% today, less than 1%, if it confirms a monthly bull flag, that increases probabilities for me that the other names can confirm monthly bull flags as well. XLV is a bellwether, and IWM is a bellwether. If these names drop to lower lows, that increases the probabilities that this pullback in the broader market can be significant. Again, I'm looking for information on this consolidation to be, are we heading back down towards the recent lows, or is this just the inevitable daily consolidation before confirming a daily uptrend and confirming monthly bull flags in a number of names, including NVDA to all-time highs, if that were to happen. XLF, so held the low of yesterday first thing, couldn't break resistance, and now if we drop down and break 33.46, we look to the gap fill of 33.36, not a whole lot further down, at least for an initial target, but bears would love to see it fail the daily bull flag into more convincing consolidation. Again, IWM giving back the majority of this move, more than half. There's a gap to fill down at 165.60, and this is, look at any chart, this is what bears want to see. You can see there's decent bear volume, and just follow through, just hourly downtrend follow through, and a significant retracement size. Another clue that we're looking for as we watch the broader market consolidation is, are all major sectors dropping together, or is there rotation going on? And today they all dropped together on that reaction, which isn't surprising. So tomorrow, again, I'm going to look for clues, because if XLF, holds that daily support and is up 0.5%, and the NASDAQ pulls back a bit more, 0.5%, to me that's bullish consolidation. That's rotation going on. A bear wants all those major sectors at the lows if we're going to see follow-through, significant follow-through. MSOS, so it turns out the gap up open did mark a temporary top. We did break support and broke the stair step into daily consolidation, but all things considered, bulls are liking where we closed. Normally, we break that support and close near the low and have a real weak day, so going to continue keeping an eye. Again, they're going through earnings season, and they're not bad right now. They're pretty decent earnings. And so we're going to look for the bulls to try and confirm a daily uptrend, and we have to confirm the daily uptrend for this all-time low double bottom to be convincing. Energy sector still great for the bears. There was a bounce, set an hourly lower high, close at the low again. That's one thing that keeps standing out. We're closing near the low 4 days in a row. And so still all bears, still watching for daily oversold, not touching that position personally. Again, I already took a little bit of profit. I think it's a 60% position that I have remaining, and just letting it go. Knowing that, we were positioned real well for the bears on any broader market pullback, and now that's taking place. So oil was responsible to the first dump, and now we'll see if the broader market can take it further down. Oil, daily inside bar, still weak there. Bulls trying to shape up a 4-hour uptrend, but they've got to prove to us a daily bounce is shaping up. TLT is still struggling at weekly resistance. So this is a potential head and shoulders now. And the weekly EMA 12 is rejecting the price just as it has a few times recently. And so again, I'm not fully confident that this bottom is in. It was obviously enough for me to give it an attempt, and at this point, pretty much risk-free with a stop under 82. But if we reject from weekly EMA 12 and lose the daily uptrend, that's a weekly lower high shaping up. And again, we have to confirm the weekly uptrend to have confidence in a longer-term bottom being set. The dollar, not quite topping out. I'm losing a little bit of clarity in the short term here. So probably just going to go to the 2-day time frame. But again, the weekly, technically still a bull flag in terms of retracement size. The probabilities of a bull flag became a lot less likely after last week, but it is still possible. And so got to keep that on watch as well. If the bulls, again, we didn't confirm the daily downtrend. Just like the broader market bulls have not confirmed a daily uptrend and still have to do so, the dollar did not confirm a daily downtrend on this drop. So that still is something the bears are going to need here. And another, gold tried to get a bounce going. It was green. So green while the dollar was green is a good sign. But we got to confirm a 4-hour inverse head and shoulders that's potentially shaping up. So we would have to do that for this to be, keep that healthy weekly consolidation. Bulls really want to hold weekly EMA 12. And having a green day tomorrow to get the daily bounce underway without allowing a whole bunch of bear follow through is pretty important for the bulls to try and shape up. Silver, I really like this 12-hour time frame. Just watching this falling wedge, and we pulled back right under that resistance, right at it. And so I'm just watching this time frame for clarity and waiting for a break. And again, a little bit of green today, but overall, got to see the dollar confirm a daily downtrend. Miners had a nice morning bounce. Almost got back to the highs of yesterday, but again gave it back when the broader market dropped. And JNUG broke the high, or GDXJ broke the high of yesterday, but again gave it all back as the broader market rolled over. The metals dropped too. Anytime the metals and the market is going in the same direction, these miners really get magnified. CCJ, uranium, standing out really strong today. So daily inside bar bull break, and this was the daily higher low after the earnings reaction. And that's our new benchmark support. Bulls in full control as long as 39.65 holds. And we're looking right back up at the 17-year high of 43.11. And so still remaining strong at this point. It's only going to be a red flag for me if we break resistance straight into consolidation, just like this last rising wedge that we were all over. That would be shaping up another one if it were to happen again. But not concerned about that at the moment. And again, very clearly standing out as a lead bull today, up 4%. And you can see what it did in the afternoon when everything was dumping. Didn't care at all. All right, feel free to ask any questions. As always, do good things, and we'll see you soon.